Welcome to the Real Estate Guys radio program. One of the most important things you will face as a real estate investor is deciding what to buy and where. It's a complicated landscape out there as cap rates are compressing and so forth. So today we're going to talk about selecting a market and making sure you've made the right choice. And we've got a great guest on the Real Estate Guys radio program. This portion of the Real Estate Guys radio program is brought to you by International Coffee Farms, where you can own a parcel of land in your very own specialty coffee farm in Panama for as little as $15,000. Here's how it works. Deeded half-acre parcels entitled Specialty Coffee Farms in Boquete, Panama are turnkey managed professionally on your behalf by a team of local experts. Sustainable average income is estimated at 12%, and cash flow can begin within 12 to 15 months from the date of your parcel ownership. International Coffee Farms' mission is to own and operate specialty coffee farms that are economically, environmentally, and socially sustainable. As part of this mission, 20% of the gross profits of each farm is committed to a socially sustainable fund to improve the lives of the Panamanian coffee farm workers and their families. International Coffee Farms currently owns and operates 9 specialty coffee farms with half-acre parcels available for immediate ownership. To find out how you can become a coffee farm owner in Boquete, Panama, email coffee@realestateguysradio.com. That's coffee@realestateguysradio.com. Forbes rated Memphis the best cash flow market in the nation, and our good friend Terry Kerr at Mid-South Homebuyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A+ rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. With me, as usual, our financial strategist and co-host, Russell Gray.
Hey, Robert.
You know, real estate is a multifaceted thing. We got to find a great property manager, a great market, all kinds of things that you look at when you're looking at real estate. And it has been a pretty good ride. And that means markets are up and prices are up. We're starting to see a little bit of softness in some markets. And we know cap rates are compressed. And what that means, if you're no investor left behind, right, a cap compression means people are willing to pay more for a stream of income. Therefore, the return you make on that income, if you paid more for the same stream of income, is lower. So take the apartment space. Apartment buildings are trading at a pretty low cap rate today, which can be good if you're selling an apartment building, but if you're buying it, it's hard to make sense out of it. So today what we're going to talk about is how do you pick the right market?
Well, I mean, we've seen this movie before too, and I think the context is why it's so important to make sure you get the market right. When everything is going up, when everything is good, you throw a dart at the wall, any market works, any property works, it's all good.
Those are great days, weren't they?
When you get the feeling that, you know, it could be a little long in the tooth and there are signs that maybe you want to be a little bit more particular, or the old saying is that when the tide goes out, that's when you get to see who's been swimming naked. The way we look at it is if your investments are floating in an economic sea and the tide is high, then all boats float. But when the tide goes out, you have to what market fundamentals are underneath your particular market, and are they going to keep your market resilient in any kind of a downturn?
Well, this is a critical thing because markets can, do, and will change, and we talk about getting married to a market. Unless you're flipping property, you're buying it, doing something, rehabbing it, selling it, and getting out. If you're a buy and hold investor of any kind, if you're a real estate developer, if you're banking land, if you're in agriculture, once you're in a market, you're married to the market. So that's why it's so critical that you pick the market, and yet markets change over time. A market that was, say, once the most prosperous market in the U.S., Detroit, has become one of the worst blighted, most terrible markets. But that took a long time. So you're not going to be able to analyze a market to the point that it's foolproof. What you are going to be able to do, though, is look at the fundamentals and ask some of the basic questions. One of the most basic questions in a market is net in migration. Are more people entering? Are more people leaving? If more people are entering a market, then it's going to push up demand for all kinds of real estate, commercial, retail, and certainly for housing. But if a market is losing people, that doesn't mean you can't find opportunity. There's opportunity that's possible, but it's one of those initial metrics. And then beyond that, and this is what our guest is going to talk about, why? Why is there net in migration? More people are coming in. Very different if it's Boca Raton, Florida, than if it is an industrial city that's creating jobs, right? If people are moving somewhere because they're retiring, so Palm Desert or Boca Raton or a market like that, it doesn't mean there's not opportunity. There can be great opportunities servicing those folks. That's the why part. But if what's happening is we're bringing in jobs, well, that tells us another story. What kind of jobs? Temporary jobs? Full-time jobs? Blue-collar jobs? White-collar jobs? So it's a lot to think about, but I think here at the beginning, the point is it makes sense to get it right.
Yeah, it all really boils down to a basic fundamental, and that's the dynamic of supply and demand, and then we add to that capacity to pay. So when you have more supply than demand, typically prices are going to go down, or at least it's going to resist upward pressure. We flip that over and you have high demand and some restriction to supply, and you add to that fuel to the fire, capacity to pay. It could be low interest rates, it could be a really robust economy, then that's going to push prices up. And then, of course, within that, you've got niches, right? Because you can be in a particular area and one area gets hot because a new employer came in, or a new sector gets hot because of the demographic shift. So these are the things, the basic concept is supply, demand, capacity to pay, but that's basic.
Capacity to pay is the part that it's really included in demand, but we pull it out so it becomes obvious to a real estate investor. And it has to do with the money that people make, but there's more to it. You mentioned lending. Part of the reason I think that we see cap rate compression, lower yield for apartments, is it's one of the commercial areas where there's a lot of financing still available. So I can get those loans, and because I can get those loans, that's a product type or an asset class I'm after, and so is everybody else. So that makes it different than the more esoteric product types or ones that are more difficult to finance. Even office is harder to finance than apartments are. So it's not about necessarily the capacity of the buyer to pay cash. It's also what can they afford to pay.
Well, yeah, absolutely. I mean, if you think about it, if you're buying into a market using leverage and you're in a falling interest rate environment, then you can get ahead of the market. You can overpay today based on the idea that you can refinance, or down the road you're going to be able to use a lower cost of capital to compensate for your overpayment.
Meaning it wouldn't hurt you to overpay.
Correct. Well, I mean, you can justify it.
Right.
So you're betting on something you don't have control over, but you're saying, I think the odds are better than not that the rates are going to fall. Well, when you're in a rising rate environment, and see, this is the thing. This is why you need to start to get picky in today's market, because cap rates have compressed. People were buying into a falling interest rate environment, and now interest rates are ticking up. So if you're buying ahead of that and your interest rates are ticking up, you better make sure you're picking solid markets that are going to compensate with some other form of demand or a restriction of supply that is going to compensate maybe for the fact that interest rates have come up a little bit. So this is what we're saying. It's why we break out capacity to pay as a separate item, because if you only isolate demand, I mean, just think about it in very simplistic terms. If you're crawling across the desert and it's 120 degrees and you're dying of thirst, and you see somebody with a bottle of water, you would literally give almost anything to drink that bottle of water. But if you don't have a penny to your name, it doesn't matter how much your demand is, you don't have capacity to pay. And so that bottle's not selling for anything. So the key is your customers or your market has got to have both demand and capacity to pay. And that comes to your point, Robert, not just in terms of cash, but also in terms of cash flow and in terms of interest rates or the ability to borrow.
Real estate markets are not all created equal. There's different markets that work great for different types of property. And, folks that are short-term real estate investors who build, develop, rehab, flip houses, that can be a different market than someone that's looking at long-term capital growth, someone that's looking at where there may be an opportunity in manufacturing or agriculture or any of that. So it's not just, hey, I want to invest in a house or I want to invest in a strip mall and let's find a place to do that. I think you also have to make sure that the market will support that thing, which is why when we talk about a market, we're going to start with maybe what we call a metropolitan statistical area. That's just a terminology that gets thrown around. MSA are these large areas. They aren't necessarily a city. They can be a couple of cities, 3 cities, but it's an area where there's geographic data, where we know that there are jobs and we can find the information. It's harder to find the smaller the cities get. It's harder to find in different countries, but it's possible to figure out where the market is headed. And then we want to look ahead and say, okay, based on that, what's coming down the road? Our guest today is going to give us some examples of some markets that he selected based on what's coming down the road. You got to see what's here, you got to see what's next, and then you have to make some educated guesses. And there is no crystal ball about this, but there's close to a crystal ball if you study markets, because markets leave clues.
Yeah, they do. And the thing is, if you're going to be a market detective, you got to have a little bit of experience. You have to know what you're looking for. A great detective is going to spot subtle clues. Somebody that has to have some evidence hit them over the head with a 2x4. If you're only dealing with that kind of evidence, well, now in that case, you're going to be competing with a lot of other people. But if you can see things that other people don't see, if you can pick up nuances other people don't see, if you pay a little bit closer to attention, then you can get in a little bit sooner. And that's really, what we're talking about is having a competitive edge when you're in a marketplace and you're looking for bargains, you're looking for good deals, is understanding what to look for at a nuance level so that you can see things other people overlook, and then you have less competition for the available opportunity.
Our guest today is a real estate developer. He's also a published author, and many of our listeners have probably read his book, Magnetic Capital. If you haven't, well, it's still available, and in fact, we're going to give away a copy on Real Estate Trivia today. When we come back, you're going to meet real estate developer Victor Menashe on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from August 24th to 27th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 10 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. 2017 was the biggest year in tourism Belize has ever witnessed, and this year has started off even stronger. How does that translate to real estate investment? Well, that's what you have to come see. There's all types of opportunity in Belize when it comes to real estate investing, including both long-term and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me August 24th to 27th in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet local providers that will help educate you about the market so that you can follow up with them after the trip if the market's interesting to you. You've heard about Belize on the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on events, where you'll find the Belize Discovery Trips. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize August 24th to 27th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under events. I look forward to seeing you in beautiful Belize.
Hello, this is Robert Kiyosaki. I'm the author of Rich Dad, Poor Dad. And if you're serious about learning how to invest in real estate, listen to the Real Estate Guys. They really know what they're talking about.
Welcome back to the Real Estate Guys radio program. I'm your host, Robert Helms. We're talking this week about market selection. It's so important that when you're looking to be an investor, you pick a good market. I like to say live where you want to live, but invest where the numbers make sense. You might live in a place that has awesome opportunity, but if you don't, you have to go outside your market. And the gentleman gentleman you're about to meet has done that in multiple ways. Please welcome back to the Real Estate Guys radio program, Victor Menashe. How are you?
Great to be here.
Always good to have you here, my friend. There's always great things to learn from you, and it's been interesting as we've watched you as an investor because you're Canadian.
Correct.
And you've done some investing in Canada, but most of what you do today is in other markets. So big picture, let's talk about why would you select a particular market that maybe you don't live in or near?
Some people think of me as a real estate person, but in reality, I'm not. I'm a business person, and I really want to obey the fundamentals of business. That means meeting things like the laws of supply and demand, price elasticity of demand. These are the fundamentals. So I want to go into a market where the numbers make sense. It doesn't, I live in Canada, and I was just looking at a report from Colliers International at the cap rates in the city of Toronto. And for multifamily, we're seeing cap rates published just in the last week of 3.5% for the multifamily asset class. I mean,
wow.
Think about what that means. It means that if you pay for a property all cash, 3.5% of your purchase price is coming back to you in the form of negative income. Forget about any debt service. You're making 3.5% on your money. Is that a great deal? Maybe it is for some, but for me, it's not.
Well, Toronto's not a bad market, right? Toronto's got positive net immigration. It's big. It's got multifaceted economy, but still 3.5% isn't great.
It's not great. They've got 80,000 people moving to Toronto every year. It's the number one immigration destination in Canada. A lot of people who want to live in the West maybe don't choose the United States, but want to live in an American kind of city with a lot of multiculturalism, a lot of business opportunity. 6.5 million people. It's the fourth largest city in North America right now, and yet the numbers don't make sense. So unfortunately for me, even though I live there, I'm not going to be investing in Toronto.
So let's talk about some of the markets you have picked. I know you've done a lot in Philadelphia, and this is really interesting. One of the first talks you did at our syndication event was about this idea of investing on the line.
Correct.
When you see a market changing, which I think we'll come back to because that's kind of a cool premise, because a market is really a sub-market. But let's talk about where you saw opportunity in Philadelphia and what were the clues there.
So I first got introduced to the Philadelphia market simply by meeting people on the ground that were doing good quality work. And that's really where this business starts. A lot of people talk about passive investing. And yes, you can invest passively in active businesses, but there's no such thing as a passive business. They're all active businesses. So at the end of the day, if you want mailbox money, you're going to be doing it as a passive investor in an active business. And what you got to focus on is, do you have good people, the right boots on the ground doing good quality work? And that's where I started, finding the right team. And when I went there, I saw them doing good quality work, and I saw great opportunity in the marketplace. So, a lot of people, when they go into investing, they think about the deal. It's all about the deal, and it's never about the deal. You got to perform due diligence on three things. You've got to perform due diligence on the specific opportunity, but that's a micro due diligence. That comes almost last. You got to focus on the people. Do you have the right team in place? And the market. Is the market going to deliver you not just a deal, but a stream of investment? And what we liked about Philadelphia, if you look at it in a macro perspective, it's like many American cities. It's got a very large low-income population. And you might say, well, why would I invest in a city with a very large low-income population? Well, it's the diversity between very high-priced real estate and very low-priced real estate in very close proximity to each other that creates the opportunity. If you have a townhouse that is worth $500,000 and a block away, that exact same townhouse is going for $250,000, that's an opportunity. It's an opportunity to create value. If you can bring up that neighborhood next door, this is that buy on the line, move the line strategy that you talked about.
Yep.
If you can find that line, and assuming that line is a movable line, meaning it's arbitrary. If it's a municipal boundary, that's not going to move. Or if it's a school district, that's not going to move. But if that line is arbitrary, you can move that line and create tremendous value because you're buying land on the wrong side of the line for pennies on the dollar. And when you've completed that new product, you're going to get valuations. The only place you can get comparable valuations for that new product is in the hot neighborhood next door.
Well, here's what's great about the strategy you just shared. It's one of the bigger topics we're going to have today, which is if the markets aren't producing the great returns, if Toronto can only give us 3.5%, then how can we find markets that do better than that? And this is the key. When we say market, you can get your mind around that, but a market really isn't an MSA. A market is a sub-market. In this case, a neighborhood. So there's a neighborhood phenomenon that says, the market's doing such and such, but if we can get on the right side of this or move the line a little bit, we can get a better than average return.
Exactly. Now, you might ask the question, so why Philadelphia? So Philly is part of that city that starts in Boston and ends in Washington. It's kind of a continuous city. But in reality, a lot of the people that I talk to that are moving into the Philadelphia market, they have a New York accent. For whatever reason, they have a New York accent. So, if you're living in Manhattan and you're making six figures, you've got a roommate because that's all you can afford.
Yep.
Now, there's a lot of people who, with that same income, working for the same company, can relocate to Philadelphia. They get a much better quality of life, much more affordable lifestyle. And if they have to go into the city, they can be in Penn Station in an hour and 15 minutes, direct, and you save a ton of money. It's a different lifestyle choice. There's a lot of people choosing not to live in New York. They still work for the same company. Maybe it's a branch office. Maybe they're telecommuting. Maybe they're coming into the city 1 or 2 days a week, and they get to live in Philadelphia. So there's a lot of influx of population into the Philly market because it's so accessible. It's really now become a bedroom community or suburb to Manhattan.
Now, Philadelphia, obviously a big market, relatively speaking, population and all that, which means there's a lot of good data available. And I know you do your research when it comes to that. But big markets aren't the only markets. I mean, it's hard to get a lot of good information about a town of 8,000. And most of us aren't going to want to invest there anyway because there aren't enough sustainable drivers. But smaller towns sometimes have opportunity. And talk about that. What is it specifically you're looking for that are the clues that a market might be worth a further look?
That's a great point. And one of the things that I look for in any market, I'm looking for that combination of, like you said, influx of population, influx of jobs. It's also, we talked about cap rate compression. People are paying crazy prices for leased up stabilized assets today. These are prices that I'm happy to sell into, but I certainly don't want to buy at those prices.
Yep.
So what we've discovered is that we can build new for 25, 30% less than that exact same product that's selling in the retail market. If I can build new product that is more desirable than maybe an apartment complex that's 10 or 15 years old, well, that gives me a competitive advantage. Now I'm not competing. It's not a 20 offer, multiple offer scenario on a multifamily building. I'm alone. I'm creating that opportunity literally out of thin air, out of nothing. Now, it's not enough to have the occupancy. It's not enough to have the demand. To Russ's point, you've got to have the ability to pay. So what does that mean? It means dollars per square foot. Today in Philadelphia, new product that I'm building, I am renting at $1.56 to $1.72 per square foot for a B-class product. That's a good number.
Yep.
If I go into a market like, let's say, Raleigh, Durham, North Carolina, rents there are averaging $1.15 a square foot, even for Class A. That's not a great number. Even though Raleigh's a great market, there's a lot of influx of population, there are a lot of high-paying jobs, you're not getting the dollars per square foot. And the fact is, the cost of construction is pretty much the same regardless where you put it. So, a sheet of drywall at Home Depot is $10, regardless where you put it. The value of that sheet of drywall is going to vary depending on where you put it. So if we're going to be building, well, why not build in a place where it's going to financially make sense?
That's such a good point. And there's two things I want to bring up. One is the minute you said build something, there were listeners that went, oh, I'm not a developer. I can't build. And that's not necessarily true. There's ways to partner, ways to come along, folks, and there's ways to invest in new products. So put that out of your mind for a minute. And of course, a lot of our listeners, they want to step up to the next level. Maybe development is for you. Victor is a successful business person that transitioned into real estate, saw opportunity, done kind of different things in real estate, but ground up development, you've gravitated towards. You haven't been doing it your whole life, but You've been figuring it out and you've got some niches. So one, don't let the overwhelm of that scare you away. But the second part is even more interesting because when you are developing something new, you can exploit these types of market differences. Raleigh might be a good market to buy a good undervalued resale property because it does have some good fundamentals. There's good lifestyle there. There's net immigration is positive. But you're not going to make the margins you are if you're coming in to a development situation. A few years back, there were a lot of markets in the U.S. where you could buy below replacement cost. That only has happened a few times in even the godfather of real estate's career of investing over 7 decades, because you can't sustain selling something for less than it costs. But when there was the downturn and you could do that, you could take advantage of that. An equator of markets is what it costs to develop. And it's not just to acquire the land and to put the labor and the materials in, there's got to be developer profit and so on. So there's kind of a floor for which prices can be.
Correct.
Exploiting this makes sense, but also you can find markets where really the puck is going, where there's a reason that somebody might be interested in that market. In fact, when we come back, we're going to talk about a specific market that you guys have just recently identified that was fascinating to learn about, right? A market I had heard of but not thought a second time about until you brought up some of the facts. But before we go there, let's just talk about how you got into development, found opportunity, and what the market has done over the time you've been in it, specifically Philadelphia.
What we found when we started in Philadelphia, just like you said, it was post the downturn, you could buy things for far less than the cost of construction. So it didn't make sense to build at that point in time. We were buying older properties, 100-year-old properties in the core of the city, and we were simply making the determination that we were going to demolish the inside, keep the historic facade of the building, and put a new building on the inside.
Yep.
Because there was demand for new product, even though the cost for new product didn't really support that. But if you can get the exterior structure basically for free, then the numbers actually made sense. So we started basically with new construction, but by keeping the existing structure.
Now, let me stop you just for a minute because, again, thinking of listeners to go, wow, okay, that's different than ground up construction. You weren't swinging a hammer and stuff. How did you find the team, and what does that look like, the people that could do that work?
Absolutely. I mean, I don't live in Philadelphia. I live, an hour's flight away, and I only go there maybe once or twice a year. So it's not like I'm hands-on or boots on the ground. We had a local team of investors that were working actively in that market every day. They, too, were not swinging a hammer. They, too, were engaging local builders, local general contractors, and we were putting together these projects specifically to go redevelop some fairly significant areas of the city. We actually amassed a fair amount of property over a relatively short time period, literally by buying land and sometimes derelict structures for pennies on the dollar.
When did it become obvious that development from the ground up might make sense? What did it take the shift in the market to say, well, in addition to what we're able to do buying some of these properties that need some help, we could start from the ground up and preserve not only some profit margin, but some certainty? Because when you buy something that already exists, you're inheriting whatever is there, good or bad, other problems, hidden stuff. When you build from the ground up, that's in many ways less risky. You know exactly what you're putting into the property.
Correct. There are fewer variables when you're building ground up completely new product. And the key for us was getting the land at a low enough cost. And what we found is we could buy individual single building lots for next to nothing because individually they weren't worth that much. If you get 3 or 4 together, now you can do a small land assembly where you can build something a little bit more significant. But at the individual price that you paid, you're still paying for something that most people consider to be worthless. And you put them together, now your cost basis, for example, if we buy 3 properties together for, say, $45,000, that's total price, yes, folks, wow. $45,000, and you can put a 10-unit building on that, your average cost per unit for the land is only $4,500. You can do a lot of new construction if your land basis is $4,500 a unit.
Wow, I think of the word for that would be free.
It's pretty close.
Free land.
It's pretty close. And then in addition to that, on new construction, we were getting a 10-year tax abatement. So we would pay the property taxes on the raw land for the first 10 years, and we would pay 0 on the improvements for the first decade of ownership. Well,
this is another great part. As you're looking for markets and exploiting opportunity, you will find cases where there is help available like this. We were in a marketplace where there was a great amount of capital available from a local entity because part of what their charter was to get the ball rolling, right? So that's probably a topic for another conversation. Let me ask you this, though. How much are you a victim of your own success when you move the line? Like you can acquire land for cheap, but then pretty soon you build these beautiful buildings and it's vibrant. Now, well, everyone's pricing the market based on the work you guys did.
Oh, absolutely. I mean, the neighborhoods that we started in, it's much more difficult for us to continue to develop in that area. It's attracted a lot of entrants and it's pushed prices up. Now, it's good for us.
Right.
In fact, we encouraged it because at the end of the day, if you do 1 or 2 buildings, nobody cares, nobody notices. You do 10 or 20 and the marketplace says, oh, I get it. The line is moved.
Yeah.
So at that point, inviting competition actually does benefit you. Like you said, a rising tide lifts all boats. Well, we actually want to be part of that tide building exercise ourselves. The other interesting thing about it is, of course, we generate our own comps. So when an appraiser comes out and starts looking at rents, Well, the rents that they have to choose from are from our very own buildings. They don't have to necessarily even go outside our portfolio to get a strong comparable basis.
Yeah, that's awesome. We're talking about markets today, how you select a market and the things you're looking for. We've got another interesting case study Victor's going to share for a market that they're getting active in. And in a minute, we're going to give away a copy of Victor's great book, Magnetic Capital, when we play Real Estate Trivia. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, this is Brad Sumrock, and I'm sure you've heard me before on the Real Estate Guys radio show. And today I'm just really excited to announce for the first time ever our Apartment Investor National Conference. I wanted to put together some of the best speakers on the planet. I wanted to put together brokers, service providers, investors that are buying multifamily properties and making money in today's market right now all over the country. So Russ and Robert with the Real Estate Guys radio show, we're going to be there speaking and teaching. We actually have Grant Cardone, Mr. 10X himself, Uncle G. And many of you may not know, but he owns thousands of apartment units. We have Tom Wheelwright, who's going to talk about how you can save a lot of money with your apartment investments as a result of the new tax laws. And so we just have an amazing lineup of apartment investors that have made over $1 million investing in apartments. This event is going to be August 18th in Dallas, Texas, and I'll look forward to seeing you there.
Join Tom Wheelwright, Grant Cardone, and the Real Estate Guys with Brad Sumrock at the National Apartment Conference, Saturday, August 18th in Dallas, Texas. For details, send an email to bradconference@realestateguysradio.com. That's bradconference@realestateguysradio.com.
Did you know that industrial real estate is one of the most desired and highest return asset classes in the U.S. today? E-commerce warehousing, distribution, server centers, construction, and automated manufacturing are just a few of the businesses increasing the demands for industrial properties. And you can invest in commercial properties for as little as $50,000 by utilizing experienced syndicators with the track record and experience to locate, negotiate, vet, and manage the best products in the best markets. Wilson Investment Properties is a national syndicator headquartered in Silicon Valley with a long, successful track record of investment real estate and commercial syndications. The Cincinnati Industrial Portfolio is an offering with 17% projected average annual returns and available while shares last. Email commercial@realestateguysradio.com for more information and private placement memorandum on this investment and for your free white paper on commercial real estate. Again, email commercial@realestateguysradio.com.
Hello, this is Dave Lendiger, co-founder at RE/MAX International. You're listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. If you've ever wanted to do bigger deals using other people's money, then come on out to the Secrets of Successful Syndication. It's coming up in September in Dallas, Texas. More than 160 people have already signed up, but there's a few seats left, so make sure you get your tickets. You can do that at realestateguysradio.com under events. Our guest today is Victor Menashe, and we're talking about selecting markets. Before we get back to that discussion, let's play Real Estate Trivia. This is your chance to win a prize by knowing today's Real Estate Trivia question. Just a minute, I'm going to ask you a question that has something to do with Canada. Not a lot to do with Canada, but something to do with Canada. And as soon as you hear the question and think you know the answer or just want to guess, you're going to send us an email to trivia@realestateguysradio.com. Include your name, your mailing address, and the answer to the question. We need your mailing address because if you win, we're going to get you a copy of Victor's book, Magnetic Capital, which is really all about how you raise money to do deals. So if you're interested in what we talked about syndication, you got to have this book. It's an awesome book. It's a quick read, but a lot of great stuff in it. That can be yours if you know today's Real Estate Trivia question. Last week on the Real Estate Guys, we were talking about valuation of real estate and appraisal. We asked this. The Appraisal Institute is a global professional association of real estate appraisers with more than 20,000 professionals in nearly 50 countries throughout the world. In what real estate market is the Appraisal Institute headquartered? Well, the answer is Chicago, Illinois. Here's our real estate trivia question for this week. You heard Victor say that Toronto is the 4th largest city in North America, and that is true. It's the largest city in Canada. What is the largest city in North America? So number 1 on that list of 1 through 4. 4 is Canada. What's number 1, the largest city in North America by population? If you know, or you just want to guess, send your best guess to trivia@realestateguysradio.com. Include your name, the answer to the question, and your mailing address, so that if you're a winner, we can send you out your very own copy of Victor Menashe's great book, Magnetic Capital. That's today's real estate trivia question. We've got author Victor Menashe with us, and we're talking specifically about markets. So the way you go to market, of course, you got to find a market, and then you're going to raise some money, and that's the raising capital part. But focusing on markets, it sounds like Philadelphia is still a market that's working. You still got a team there. It's making sense. Prices are going up. That's good for people that have bought. At some point, not. So you're always looking for other opportunities. You've recently found a market which is not at all like Philadelphia, but it's very interesting. So let's talk about how you found the market and what are these big driving factors.
So I developed a relationship with two ladies that happen to live in New Orleans, and we basically started looking at opportunities all over the country, and they found an opportunity in their backyard. Turns out they have personal relationships with people that are in the industry locally in Louisiana, and came across this smaller town. It's a tertiary market called Lake Charles, Louisiana. It's on the Interstate 10 corridor. Of course, Interstate 10 runs all the way from Florida to Arizona along the Gulf Coast, and goes right through Houston, goes right through New Orleans, and Lake Charles is on the I-10 corridor. Now, this town is a smaller town, about 95,000 people. The whole MSA is about 200,000 people, and this small, sleepy little town has $118 billion, that's right, with a B, of natural gas, petrochemical, and seaport expansions over the next decade, which is a staggering number. It's almost hard to wrap your mind around a number like that. So why Lake Charles? This is a town that started out as a natural gas importation facility. There are pipelines emanating from that location, fanning out all over the country. And with the rise of domestic production of natural gas, a lot of those pipelines have been turned around, and it's now an export facility.
Wow.
So you're getting natural gas terminals, you're getting petrochemical plants like ethane crackers. Now, if you're not a chemical engineer, you may not know what that is, but this is something that takes methane, which is natural gas, converts it to ethane, converts it to ethylene, and now you're starting to get to the elements of plastic. It's about plastic production. A lot of people, when you talk about the oil and gas industry, they start to get scared and worry about what's going to happen if the price of oil falls. Well, this has nothing to do with the price of oil. This has nothing to do with exploration. It's all about distribution. In fact, it was announced in the last week about a new trade deal with Europe, where the United States is going to be exporting natural gas to Europe, and Europe is committed to building 14 new natural gas terminals in order to accept natural gas from the United States. A little bit of a security supply issue. Right now, much of Europe is getting their natural gas pipelines coming from Russia, coming through the Ukraine, and they want additional security supply. So Lake Charles, Louisiana is the name that keeps coming up over and over again as the source of that supply. But a lot of it's even domestic. You've got PG&E, the California utility, taking natural gas on ships through the Panama Canal to power generating plants on the Pacific West Coast. You're not going to get a pipeline going through the Rocky Mountains approved anytime soon. It's just not going to happen. This is how it's being done.
Well, this is so interesting because the number, that's a big number for the number of population, is tremendous. We see these kinds of infrastructure projects in some of the bigger MSAs, but this is unique in that regard. And here's the other cool part of this. That's not something that you lightly enter into. They're not going to put this infrastructure in and then move it easily, right? No. This is a long-term commitment. So just looking at that, I'm guessing, and you're going to share with us, that means population is expected to increase, jobs and the ancillary services for those folks. What does that part of it look like?
They need absolutely everything. I mean, this is a town that's absolutely on a growth tear. We're talking about permanent population growth over the next decade of 35,000 people. On top of that, a temporary workforce of an additional 25,000 people. There's more mega projects still to be announced. And it's not just, what's coming over the next decade. We're already talking about $48 to $50 billion of construction currently underway. If you go to Lake Charles today, you will experience an hour-and-a-half traffic jam on Interstate 10 twice a day during rush hour. It's hard to get your mind around that kind of traffic in such a small town.
We saw this in the Bakken, right? When all of a sudden there was all this demand and there were jobs, but there was no housing. People were driving 2 hours to get to work.
Yeah.
People were sleeping in their cars. They were putting up temporary housing. When we looked at that, one of the big fundamental questions we had, and a friend of ours is an attorney for oil and gas companies and did a lot of work there, is these jobs. Are these jobs temporary or permanent? And now we kind of all know that the vast majority of those jobs were temporary. Doesn't mean there was an opportunity temporarily, but one of the things that intrigues us here is the number of permanent jobs.
Exactly.
This is not an install where they go in and pull oil out and leave. This is infrastructure.
Exactly. I mean, when you talk about a liquid natural gas plant like the G2X facility, they started this facility as a 700-acre project, and then they added a phase 2 of an additional 500 acres. We're talking natural gas plants of 1,200 acres. Again, it's hard to wrap your mind around something of that size. And this is just one of several projects that are currently underway in the Lake Charles area. And they're just attracting a lot of population. These are skilled jobs. Now, you might say it's blue-collar work, but we're talking about skilled labor, pipe fitters, welders, people that operate heavy equipment. You're talking average household incomes north of $90,000 a year, and that is our tenant population, people with household incomes of $90,000 a year, not your typical tenant profile. So, Russ was talking about not just influx of jobs and population, but ability to pay.
Yep.
We've got ability to pay. The product that we're building in Lake Charles, we're looking at rents of, $1.50, $1.60 a square foot. Again, these are good numbers even for new construction.
Now, we may not know this about Victor, but he's a pretty diligent guy. In fact, on this year's Investor Summit at Sea, we invited him to be on our due diligence panel, which was great. It's one of those topics that isn't sexy or exciting, but you desperately need. And we think of due diligence, really the traditional due diligence is once you have a property in contract, making sure you're inspecting and finding out and getting disclosure about the property. But we expand our definition to include providers, people you deal with, vendors, and markets. And so Victor's put together a pretty extraordinary market snapshot of this very market. Not that you may be interested in Lake Charles. That's not the point. The point is, looking through this will help you kind of understand the eyes a developer looks through to see market opportunities. So we're going to give you a chance to get that report because, as you said, who knows if people are interested in this particular market, but they need everything. So now, given the fact that they need everything, what do you do?
Well, in our case, we've just seen so much opportunity that we actually have 4 projects underway in Lake Charles. We've got some workforce housing. We've got some Class A multifamily. We're building a medical office building, and we're also building senior housing. So we have quite a bit on the ground already, quite a bit in development, and we're, of course, scouting for more land because we see even more opportunity beyond what we currently have in the pipeline.
Yeah, well, this is the other part of looking at a market. When you look at a market, the market will speak to you. It will say, here's what we need. And sometimes it's residential, and sometimes it's commercial, and sometimes it's medical. There's so many different things. And if you only operate in a small niche, you're going to look at a market and say it's good for industrial property or it's not. Okay, well, because this is natural gas and it's not manufacturing, maybe industrial doesn't make sense. The land has to go to other areas. But you've identified what the needs are here. And this is the bigger picture. As you're looking at a market, if you are an apartment investor, then you've got to find a market that makes sense for apartments. If you are a single family home developer, you've got to find that market. If you're a buy and hold single family house investor, those are different markets. But in this case, you got attracted to the market and the big picture, and then within that figured out, well, what do they need? And more importantly, how do you assemble a team to get what they need? Talk about that part of it.
Well, that's critical. So, for example, there's clearly needs beyond those 4 projects that we've identified, and we don't necessarily have the skill base to go do that. In fact, the skills are in such demand that even if you could find them, you couldn't hire them, you couldn't afford them. So there are some segments we've simply elected not to play because we can't find the right team. So it's not just about the opportunity. You actually got to execute. A lot of people think about the hard part being raising the money or putting the deal together, but that's actually the easy part. The hard part is actually executing the projects.
Right.
If you're an investor, you really got to do due diligence on the team. You're hoping to make a passive investment, but again, these are not passive businesses. They're absolutely active businesses, and a good deal badly managed, of course, is no deal. So the only differentiator is the management. What's the quality of the team that you put together?
Well, I appreciate your business background in this regard because a lot of real estate developers, they see demand, they know land, they know entitlement, they get stuff built, they have contractors. But you look beyond that because you're looking at holding on to an asset that is a business. If you build, like you guys are, a 240-unit apartment complex, That's a business.
It's a business. Absolutely.
It's not just a real estate holding. And so that means you need that team. And if you're not boots on the ground, I submit you actually can do a better job if you're not boots on the ground. And here's what I mean. Somebody has to run the business. But if you live in the market and have the tendency that I can just run over there and check on things if I have to, then you set yourself up to do that. If you're not in the market, then you're forced to set up the kind of systems and teams that you probably need anyway. So it's just another way of thinking. The market specifically here has some legs. Let's talk about what you think long term. I mean, this is a short-term play, medium-term play. It sounds like the jobs are going to be there for a while, but what are you guys thinking as you get into this particular market?
We see that this is a town that really has embraced heavy industry. There's a lot of towns that, see the opportunity. A developer will come in and offer to put in a natural gas terminal, and all of a sudden there's a lot of community opposition. And, you go through 5 or 6 years of public hearings and applications and denials, and eventually people get fed up and they leave and go somewhere where that's a little bit more accepting. Lake Charles has been very accepting of heavy industry. And, we know, having talked to some mega plant operators that have tried to do projects in other communities, they've come down to Lake Charles and said, we feel like we're home. So this community is accepting of heavy industry. We believe that it's going to continue to grow. We're not reading about this stuff. We're not sitting behind our desk looking to Google for answers on stuff like this. We're actively talking to principals in the market, finding out what investment decisions they're making, and it's really finding out the information firsthand.
Well, and that's a point, because you've been kind enough to offer this market report, which is really just the research that you've done. Correct. Some of it is publicly available, but some of it is also firsthand. Talk about what's in the market study and what people are going to learn.
The way that we look at the market is not just to figure out, who's coming into the market and what are their incomes, because that's certainly an important part of it, but it's also where's the demand going to be? How much of that market demand is going to be for single-family homes that people want to buy? How much of it is for multifamily, where they're going to want to rent, even if they're renting on a medium-term basis? A lot of people say, if I'm going to be in a town for 5 years, I want to buy. But in this case, people aren't necessarily settling in Lake Charles for the long term. They're not necessarily settling there for 20 or 25 years, although there are some who do. A lot of people say, I'm coming there, I'm going to make a lot of money for the next 5 years, and then I'm going to go back to wherever I came from. And that's perfectly fine. That's just the dynamic of the market. We're talking about skilled labor. We're talking about people that are engineers. We're talking about project managers, folks that are definitely going to be making a large investment in time of their professional career in Lake Charles.
Now, we've run out of time to talk about it, but the various products that you are putting into the market actually reach different demographics, which is really cool, because you have, pipe fitters and you have executives and you have all kinds of folks. So that's maybe for another day. But if you're interested in learning about how Victor looks at a marketplace, then you can get the market study. If Lake Charles sounds interesting, then you'll learn specifically about that. But really, we wanted to have a resource so you could see what are the things you look for and how do you see and what do you ask, and you'll be able to glean a lot of that as you read the report. If you'd like a copy of it, stay with us, and I'll tell you how you can get that for free. Victor, it's always great to hear you on our show, but also on your own podcast, the Real Estate Espresso podcast, which, I don't know how you do this, man, comes out daily.
7 days a week. Absolutely.
So it's a little shorter than this podcast, but it's good stuff.
The Real Estate Espresso podcast, I really saw a hole in the marketplace. And, the Real Estate Guys radio show is my favorite. It's what I listen to every week when it comes out. And I also saw a need in the marketplace for something that was going to be digestible, like your morning shot of espresso, something that you can listen to while you're having your coffee, maybe taking a shower. And, many of the listeners are doing exactly that. They like the fact that it is a 5-minute show, 5 days a week. Weekend edition, slightly longer, interview style, and we just keep it bite-sized, straight and to the point, and we're not wasting people's time.
So check that out, and join us for the Secrets of Successful Syndication. That's coming up in the middle of September in Dallas. Victor will be there. He always does a great segment on raising the money to do projects, so we'll look forward to seeing you there.
I look forward to it.
You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hi, this is Patrick Donahoe of Paradigm Life. Over the last few years, I've had the privilege of sharing the services of Paradigm Life with you loyal Real Estate Guys Radio listeners through our website, www.beyourbank.com, and also on the annual Investor Summit at Sea. Subsequently, we have seen a variety of financial situations across the socioeconomic spectrum and how everyone, regardless of their situation, would improve their financial lives by following the system we specialize in. As a result of this experience, we have created an online e-learning system so anyone without obligation can learn about the infinite banking concept. This free e-learning program is found on our website, www.beyourbank.com. So check it out today. The website again is www.beyourbank.com.
Hi, I'm G. Edward Griffin, author of The Creature from Jekyll Island, a second look at the Federal Reserve. And you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, there's lots of cool stuff on our website. If you haven't been there, you can go there and peruse. You can also sign up for our newsletter, which has been coming out so regularly, it astounds me. Just go to the website at realestateguysradio.com and check it out. Awesome to get around Victor Menage.
Yeah, it's great. And having Victor come into our lives when he did has just been fantastic. You hear all the time people say, you should treat your real estate investing like a business. Well, okay. And then what does that really mean? You know, and then how many business people are really out there helping investors learn how to be better investors in terms of running it like a business? So Victor's just one of those guys. I've learned a lot from him. I like the business side of things more than the deal side. You know that. My personal deal philosophy is know somebody who likes to do deals, you know, because my thing is I like to run the business side of things. So Victor's just got this pragmatic approach to things. He's logical. He's thorough. And, you know, he just lays it down, and then you listen to him. And I always learn something when I hear Victor teach. It's really solid.
You know, we talk about how there's people that know a little about a lot of things. We always joke that Victor knows a lot about a lot of things. But, you know, when you're looking at a market, you have to know a lot. Now, one of the things we didn't talk about early in the show, I think we need to, you know, fully disclose, is that as much as you want to get all the information on a market, and you need to, especially if you're going to pull the trigger on something, it is really hard to be involved in more than a handful of markets, right? Victor's got a big experience resume, but he focuses on just a few things. All the successful people are like that. Ken McElroy, right? He and Ross have tens of thousands of doors, but they're in just a handful of marketplaces. We've got international holdings in just a handful of marketplaces. You can't know a market as well as Victor and his team know Lake Charles and do that 30 different places.
Well, and it's not just the knowledge. I mean, you can accumulate a lot of knowledge, but that's only typically looking back. If you really want to know a market, you've got to have boots on the ground. You've got to have your thumb on the pulse. That's relationships. And you only have so much time in your life to develop relationships with people, quality relationships with people that you trust. And so knowing that, if you're going to have a relationship with a boots on the ground team to really get to know a market, not just what's happened in the past statistically, but what's going on right now in the market, in the feel, the vibe, you know, where are the lines in terms of demand and what's the buzz on the street? The only way you get that is people who are full-time living in that market. If you're going to bring that intelligence home outside the market, you have to maintain great relationships with that boots on the ground team, and you only have so much time to do that.
Speaking of markets and relationships, coming right around the corner, it's our Belize field trip, a market that we know and love, and we'd love to show it to you if you're interested in offshore investing, if you're thinking maybe resort property makes sense, if you like the idea that a property you own can rent for enough one night to pay your property taxes for an entire year, then come to Belize. All the details on the website at realestateguysradio.com under events. Thanks to Victor for being on the program today. You can catch him at the Secrets of Successful Syndication or next year's Investors Summit at Sea. If you'd like a copy of Victor's market study on Lake Charles, Louisiana, just send an email to marketstudy@realestateguysradio.com. Next week on the show, we start a two-part series on protecting the assets you work so hard to acquire. We've got 2 attorneys and 2 shows. It's going to be great. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.